They say the market turns before the news does. They're right. But only a few ever learn to see it. I've watched thousands of traders chase the trend until it collapsed under their feet, while I stood silent, waiting for that single flicker. The moment the market whispered, "I'm about to change direction." That whisper, that invisible shift, became my greatest weapon. You can't find it in an indicator. You can't buy it in a strategy. You have to feel it, the way a sailor feels the wind before the storm. And that feeling? That's what I spent a lifetime chasing. When I first started trading, I believed reversals were random, unpredictable waves that no one could time. But the more I studied the tape, the more I realized the truth. The market never turns without leaving footprints. They're hidden in the speed of the tape, in the way volume breathes, in how the crowd suddenly stops believing in the trend they worshipped yesterday. That's when I knew. The top isn't when everyone's afraid. It's when everyone feels safe. The bottom isn't when prices are low. It's when hope is dead. I've seen it countless times. 1907, 1920, 1929. Different years. Same story. The crowd always chases momentum. But momentum ends quietly, not with a crash, but with a pause. That pause is everything. It's where the smart money exits and the emotional money enters. Most traders miss it because they're looking for confirmation. But the market doesn't confirm reversals. It tests your conviction. You want to learn to spot those turns? Start by watching people, not prices. When the crowd's loudest, the move is almost over. When silence fills the tape, the reversal is near. Every great shift begins with hesitation, a single moment of doubt in the crowd's belief. That's your signal. If you want to master that silent moment, the art of reading reversals before they appear, you're in the right place. Welcome to Jesse Livermore Academy, where classic Wall Street intuition meets modern trading logic. Here, you'll learn not just when trends begin, but when they're about to end. Subscribe now, and discover how the greatest speculator in history spotted every storm, before the first cloud formed. You think spotting a reversal is about the chart, don't you? About patterns, moving averages, candle signals, and perfect setups. That's what I thought too, until the market humbled me. The truth is, reversals don't appear when you expect them. They appear when you stop paying attention. When everything looks perfect. That's when danger hides in plain sight. I remember my early years in the bucket shops. The tape was my teacher. I'd stare at the numbers, as if they held a secret language only I could learn. But every time I thought I'd found the signal, the market turned the other way. You felt that, haven't you? That sting when you buy the top or short the bottom, because your conviction blinded you to the signs right in front of you. You see, reversals aren't missed because the signs aren't there. They're missed because your emotions rewrite what you see. When prices rise, hope turns into greed. You tell yourself, it'll go higher. Just one more push. That's when the smart money leaves, quietly, without announcement. When prices fall, fear takes over. You tell yourself, it can't go lower. That's when the strong hands start accumulating while you're frozen, waiting for the chart to confirm. The reversal doesn't wait for confirmation. It begins when you stop believing it's possible. The crowd never sees the turn because the crowd doesn't watch the market. They watch each other. They trade confidence, not logic. Excitement replaces analysis. And before they know it, the trend shifts right under their feet. I've lived through that blindness. In 1919, I was long, confident, certain, proud. The tape slowed, volume thinned, but I ignored it. The next morning, the market opened 10 points down. Not because the fundamentals changed, but because the mood did. You see, trend reversals aren't about price. They're about psychology. The market turns when belief does, and if you can't read that belief shift, you'll always be too late. That's why most traders lose during turning points. Not because they can't see them, but because they don't trust what they feel. The signs are always there, but emotion blinds the eye that needs to see them. So ask yourself, do you read the market, or do you read your feelings about it? Because the trader who can tell the difference is the one who survives every storm. It took me years, and millions lost, to realize the truth. The market never turns without warning. It always leaves a trail. Subtle, invisible to most, but clear to those who know where to look. Reversals don't begin with chaos. They begin with quiet hesitation. The rhythm of the tape slows. The crowd loses its certainty. Momentum breathes differently. Softer, unsure. That's the whisper before the storm. Most traders miss it because they're addicted to noise. They stare at every tick, every headline, every social rumor. But the market doesn't speak through noise. It speaks through behavior. Before a top, buyers stop pushing. The same volume that once lifted prices begins to stall. You can almost feel it. Like air thickening before lightning strikes. Before a bottom, sellers lose conviction. They're exhausted. Volume dries up. Price falls slower, but emotion still screams panic. That's when I know. The end of fear is the beginning of opportunity. I used to chase reversals with prediction. Now I listen for them with patience. Because the market doesn't test your strategy. It tests your ability to stay calm when everyone else loses control. The top forms when confidence becomes arrogance. The bottom forms when despair becomes silence. And both moments share one thing. They break the crowd's belief. Once you learn to feel that shift, you stop reacting and start reading. You stop chasing and start anticipating. The crowd will call it luck, but you'll know better. You'll know it's the art of observation. The discipline to wait until the market tells you it's ready to turn. Because trend reversals aren't about predicting the future. They're about understanding human emotion in real time. That's how I spotted every turn that built my fortune, and avoided every storm that destroyed others. You see, spotting a trend reversal isn't about prediction. It's about patience. Patience to wait. Patience to listen. Patience to silence your own fear until the truth becomes clear. Most traders think precision comes from analysis. But real precision comes from stillness. Because in silence, the market reveals what noise tries to hide. I've learned that every major turn begins long before the chart confirms it. The crowd rushes. The disciplined trader waits. It's not hesitation. It's awareness. It's knowing the market doesn't reward speed. It rewards clarity. When you stop trying to force the turn, you finally begin to feel it. That's the difference between those who chase reversals and those who catch them. The best traders don't predict the future. They prepare for it. Because patience isn't the absence of action. It's the mastery of timing. It was early October 1929. The sky over Wall Street was clear. But something in the air felt wrong. The ticker was steady. Too steady. The market had been rising for months, breaking records every week. And yet, the tape didn't breathe the same way. I watched it like a man listens for thunder before the storm. Volume was rising, but the price wasn't following. Momentum was breaking down, quietly, like an engine losing oil. To the crowd, everything looked perfect. To me, it felt too perfect. And when markets feel perfect, that's when they're about to break. I remember sitting in my office, the windows half open, hearing the noise from the exchange floor. Cheers, laughter, the sound of confidence echoing off marble walls. That's when I felt it. The shift. The tape slowed. The rhythm broke. And for the first time in months, the buyers hesitated. No crash, no panic, just hesitation. The kind that only a disciplined eye can see. That's how reversals begin, not with chaos, but with doubt. I started shorting quietly, not out of fear, out of conviction. Because when greed reaches its loudest pitch, the trend has already died. Days later, the cracks widened. The same traders who bragged about endless profits were suddenly whispering. Stocks that had never fallen before started drifting lower. Margin calls began trickling in, and by the time the crowd realized what was happening, it was already too late. October 24th, Black Thursday. The market collapsed. Phones rang endlessly. Faces turned pale. And in the chaos, I sat calm. Not because I knew the future, but because I had listened to what the market said before it screamed. That's what I want you to understand. Reversals aren't luck. They're psychological tides. And if you learn to feel them, you'll move before the wave breaks. When the dust settled, I wasn't celebrating. Because that trade wasn't about money. It was about mastery. It proved that patience and observation can predict what greed never sees coming. And that day taught me a rule I never forgot. The trend ends not when prices stop moving, but when emotions stop believing. That's the real secret to spotting reversals. Reading emotion, not charts. And once you see that truth, you'll never look at a market the same way again. I used to think reversals were random, mysterious shifts only luck could catch. But the longer I traded, the more I realized, the market never turns first. People do. Every trend reversal begins in the human mind. The chart only mirrors what traders are already feeling. When the market's rising, people stop seeing risk. They call greed momentum. They call recklessness confidence. And when the trend finally breaks, they don't see it as danger. They see it as a dip to buy. That's why most traders lose everything at the top, because they confuse optimism with opportunity. The same thing happens at the bottom. When prices crash, logic disappears. Fear turns every tick into a threat. Traders stop analyzing. They start surviving. I've seen men sell perfectly good stocks because they couldn't stand the pain of watching one more red candle. And just when they can't take it anymore, that's when the market reverses. Because the moment fear peaks, smart money returns. The crowd throws away value, and discipline quietly collects it. You think trend reversals start with volume? They start with emotion. The crowd doesn't turn because of data. It turns because of exhaustion. Euphoria can't last forever, and neither can despair. If you can read that emotional fatigue, you can see the future before it happens. That's what I learned watching the tape for decades. The market isn't a battlefield of bulls and bears. It's a mirror of belief and fear. Every surge is belief inflating. Every collapse is fear escaping. And the space between them, that's where reversal lives. You can spot it if you stay calm enough. Look for hesitation where there was conviction. Watch how traders start questioning their own certainty. That's your clue. That's the moment of weakness before the turn. Most traders won't see it, because emotion clouds vision. But the trader who detaches sees clearly. I've said it before and I'll say it again. The market doesn't test your skill. It tests your self-control. When you learn to master your emotions, you stop reacting to reversals. You start anticipating them. Because trend reversals aren't born on the chart, they're born in collective emotion. And the trader who reads emotion controls the market's rhythm. That's not prediction. That's psychological precision. You want to know how I learned to spot a market turn before everyone else? It wasn't luck. It was discipline sharpened by silence. The market speaks, but only to the trader who listens. Let me show you how to listen. Step 1. Watch behavior, not price. Every trader watches price. Few watch behavior. Behavior tells the truth long before price confirms it. Notice how the crowd reacts, not what the chart says. If the market rises but the energy feels tired, if the tape moves slower, if traders start taking profits too early, that's hesitation. That's the first sign the move is ending. The reversal begins when confidence begins to fade. Step 2. Let volume tell the story. Volume is emotion made visible. When trends weaken, you'll see heavy volume at tops, everyone rushing in, and then silence. At the bottom, you'll see panic volume, sellers flooding the tape, and then stillness. That stillness means exhaustion. The crowd has spent its last ounce of belief. That's where I start watching, not trading. Step 3. Train your mind to wait. The crowd trades movement. Professionals trade moments. Every reversal hides inside a pause, that gap between momentum dying and direction shifting. You must train your patience to live inside that gap. Wait for the crowd to scream, then wait again. When the noise dies, the truth appears. Step 4. Confirm. With logic, execute with calm. Never fight your own rules for excitement's sake. When the pattern aligns, falling momentum, fading volume, psychological fatigue, enter only when the market confirms you're calm. Don't chase the turn, align with it. You don't catch reversals by guessing, you catch them by being ready when emotion collapses. Step 5. Record. Every emotion you feel, after every session, write down your emotions: fear, greed, hesitation. You'll begin to see patterns not in price, but in yourself. The market repeats behavior, because humans repeat emotion. Break that cycle, and you'll see the market clearer than ever. Reversal spotting isn't a trick, it's a temperament. It's the art of reading emotion through motion. When you learn to feel the shift before the chart confirms it, you've stepped beyond prediction into mastery. Because in the end, trend reversals aren't caught, they're sensed. And the trader who can sense them early moves before the world even sees the turn. Let me ask you something. When the market starts to shift, do you feel it first, or do you wait for proof? Be honest. Because that moment, the hesitation before the turn, is where 90% of traders fail. You've seen it happen. The chart looks strong. The crowd is screaming, "Buy!" And deep down, a small voice inside you whispers, "Something's off." But you ignore it. You chase. And seconds later, the market reverses, without mercy. So tell me, when that whisper comes again, will you listen this time? Will you trust your logic or your emotion? I want to hear it from you. Drop a comment right now. Do you spot reversals early, or always a few seconds too late? What signal tells you the crowd's belief is breaking? Because awareness is the first step to control. The more you speak it, the faster you learn to see it. The market tests your mind every day. The question is, will you pass the next one? I've spent a lifetime watching markets rise and fall, and if there's one truth that never changes, it's this. The market always turns. But only the prepared survive the turn. You can learn every strategy, master every chart. But until you master yourself, you'll always arrive one step late. Reversals don't reward prediction. They reward discipline. The ability to stay calm while others lose control. The patience to wait when the crowd can't breathe. That's how you win in silence while the world panics in noise. If this message spoke to you, don't let it fade. Subscribe now and join the Jesse Livermore Academy, where you'll learn to read not just the market, but the mind behind it. Because the greatest reversal you'll ever catch is the one inside you.